Joining me for a closer look at what's playing out on the market scene at midday is Andrew Padoa from Sasfin Wealth. Andrew, thanks so much for your time this afternoon. So,
Thank you.
volatility really remains the name of the game here. And I guess the risk-off mood we are seeing comes as we await those announcements from President Trump's administration. Just your general reading of markets activity this week, because we have seen days where markets have closed in the green, and then we'll see, a sell-off being sparked on other days.
Yeah. Well, thanks for having me in Taoleng. I think what we're likely to see is a market that's just going to be very choppy for a couple of weeks. I heard someone say we're not in a bull market, we're not in a bear market, we're in a kangaroo market where it's just going up and down and up and down. And I think that's what we've seen the last couple of days on the JSE. Obviously a bit of weakness now in Europe, in South Africa, waiting for, I think it's 3 p.m. this afternoon, SA time, that Trump will be announcing, his news. And the rand's weakening as a result. So I think everyone's just bracing themselves. It's a wait and see approach, and then we'll see what happens thereafter.
And we'll get into the rand's performance in just a bit. But I want to continue talking about markets action and what we've seen play out over the first quarter. I mean, in the first quarter, we saw a rotation out of U.S. stocks into Chinese stocks, particularly in the tech sector. What I found interesting is Europe's performance amidst it all. Looking at how European markets have performed over the past 3 months, we are seeing that they've performed even better than the U.S. stocks. Is this another case of rotation here?
Darling, I think there is an element of rotation. In the U.S. market, we've got a very tech-heavy sector. So the Microsofts, the Nvidias, and we've seen the likes of an Nvidia down, 25%. Tesla's down even more. If we look at China, I think when we saw the DeepSeek news in February, that sparked a bit of optimism there. So we've seen a great rally with the likes of Tencent and Alibaba. Thankfully for us in South Africa on the JSE, Naspers and Prosus as a result have done really nicely. And I think that's masked some stuff that's been going on in the JSE. And then if we look at Europe, I think with what we've seen in Germany with their massive spending on defense, we've seen huge moves from some of the defense stocks in Europe. Some of them in the last 3 months are up over 100%. These are moves we don't really see. But I think if we zoom in a little bit in Europe, the defense stocks have done really well, but Hermes has done quite nicely. But then there are some stocks that have struggled a bit, the likes of Innova and Nordisk, which is still an amazing business, but is down 25% over the last 3 months.
And back at home, we've also seen some resilience from the JSE. You spoke about gains from Naspers and Prosus. We also have those commodity counters also making gains, particularly gold miners, which have been boosted by record gold prices. Talk to me about the kind of performance we've seen from the JSE over the past 3 months. I think the top 40 hit an almost a 2-year record over the first quarter.
Yeah, so a great start for the South African stock market. But I think there's a handful of stocks that are kind of masking what's actually been going on. So like you're spot on, the gold stocks have done really well. Platinum has done quite nicely recently as well. Naspers, Prosus, Richemont, British American Tobacco has done nicely. We've also seen a good rally from the likes of MTN. But I think those kind of stocks have masked what's really been going on in the SA Incorporated space, where it's been a bit more tricky. If we look at the retail stocks, the likes of the Mr. Price, the Truworths, the Foschini Group, these stocks did really well last year with a bit of optimism with the GNU. We've got load shedding was kind of, it disappeared for some time. Now it comes back every now and again. But interest rates were coming down. So those stocks did really well last year. But 2025 for the retailers has not been a great picture so far. If we look at the banks, Nedbank and Absa, I was just talking to my colleagues this morning, their PE ratios are lower than their dividend yields. That rarely ever happens. So there are some cheap stocks in the South African market. It's now a question of, are they cheap for a reason, or are they really attractive investment opportunities?
And looking at the rand for a second, right? You talked about optimism around the GNU, and we are seeing that somewhat fizzle out as we've seen, some squabbles, some conflict between some of the two, or rather the two biggest parties within the GNU. And we have that budget vote taking place today. the last time I checked, the rand was nearing 18.60 to the dollar. How much of this has to do with that looming budget vote and the conflict we are seeing within the GNU, and how much of it has to do with, I guess, dollar strength with those tariffs coming through later?
There's quite a lot of moving parts for the rand, especially today. I think first one is the tariff news and the global market reaction and sentiment to the tariffs as a whole. If it's negative, it's a risk-off environment where emerging market currencies will weaken, including the South African rand. Secondly, if we are targeted in the tariffs this afternoon, that's obviously not good news for South Africa or for our rand. And then thirdly, like you said, we've got the government trying to figure out whether this budget is going to be passed or not. We're in a bit of a debt trap in South Africa. We're struggling to get out. If there's a disappointment in the budget or if there's conflict in the GNU, it's all net negative for the rand. So I sound a bit gloomy, but it doesn't look like a great picture for the rand at the moment. There's a lot of things that are headwinds for the rand instead of tailwinds.
And just sticking with news around that looming budget vote, with the conflict, or with a deal still haven't been reached as yet.
Yes. Yeah.
What could this possibly mean for market sentiment, right? We are seeing the possibility of the DA perhaps walking out of the GNU. What could this mean for market sentiment and investors looking into South Africa?
That would be a very big blow, to put it bluntly. The latest deal that I was seeing in the news this morning includes various measures to grow the economy through accelerated reforms, but that would mean we would see a 50 basis point hike in VAT, and then that's it. I think that's the latest proposal that they're going to kind of figure out this afternoon. We're at a crossroads in South Africa and Thailand. We can't create prosperity by raising taxes continually. There's a thing in economics called the Laffer curve, which says that there comes a point where any hikes in taxes is actually a negative, and it won't result in extra revenue for the country or for the government. And I think if we're not there, we are very close to that point. High taxes discourage work, discourages entrepreneurship, it discourages investments. People will have stronger incentive to avoid tax or evade tax. The wealthy will leave the country to tax havens. There will be more jobs created in the informal economy where there's no taxes paid. So we've got to stop taxing our people more. I think that's my kind of lesson. So I'm happy to hear the latest deal includes measures to grow the economy. I haven't seen what those actual measures are. So that's encouraging, but we're good at coming up with ideas in South Africa, but executing them is another story. We have to execute.
All right, Andrew, let's hit pause on the conversation. Before we get to your stock pick, let's reflect on some counters that have found favor with your industry peers.
It's Omnia. Very specifically, they're down about 15% from their recent highs, in line with the market. There is a dispute with SARS overhanging the stock, but I think that should mostly be in the price. As far as the operations are concerned, it's only the chemical side of things that are not doing all that well. But I think they will have, on the agricultural side, a good year. We've seen a harvest coming in. On the mining side, should be okay. And in their last report, they've been increasing both volumes and margins in both of those businesses. And they're sitting with a very healthy balance sheet. So I don't think it's it's going to double or anything like that. But I think at current valuations, current prices, we should have some kind of price adjustment and upside to the higher 70s, maybe 80 rand on that.
Yes, so tonight I'm picking Bidcorp. So it's a nice, large, quality company. Share price has done nothing for about a year. I think it's basically flat over a full year. So you're paying a better price than a year ago for this company. It's got a big, diverse business across geographies. 40% of the business is in Europe. So any pickup in a better macro situation in Europe, any resolution to the Ukraine-Russia war, that kind of thing will be good for sentiment for the stock. I think earnings will grow above double digits, so maybe 11%, 12% a year, and you get a dividend of 2.5%. So it's a nice a nice decent return for a big quality company.
So, Mark going with Bidcorp and Rickers picking Omnia. Just your thoughts on those counters?
Sure, let's start with Omnia. So the valuation is not demanding. It's on a single-digit PE. They are diversified, so they're not a one-trick pony. You know, Rickers' points on them having a strong balance sheet and potential margin expansion are all very valid points. Forward dividend yield of 7%, that's not bad at all. It's not one that we are invested in at Sasfin, but it doesn't necessarily mean it's a bad investment. On Bidcorp, we are holders of Bidcorp, and we do like this business. It's a global business that is listed on the JSE. And I agree with Mark. You know, we should see double-digit earnings growth from Bidcorp going forward, and with that, double-digit expected returns.
All right. So that not your stock pick. What are you picking today?
Yeah. Sure. My stock pick today is NVIDIA. We're in an AI super cycle. If you just look at the capex for the big tech companies in the US, even with DeepSeek's announcements in Feb, the big tech didn't reduce capex, they increased it, they ramped it up. The world's AI is run on NVIDIA, bottom line. NVIDIA's on a forward PE of 23 times. The last time it got to this valuation was in March 2020 during the COVID, you know, when COVID first hit. NVIDIA also has a rock solid ecosystem with their CUDA software, and I don't think many people kind of talk about that. It's always about the chips, but it's also CUDA software. Many of these models that we are seeing around the world are run on CUDA software, and you can only get CUDA software through NVIDIA's chips, so there's a strong competitive advantage there. So that's why NVIDIA's my pick today.
Andrew, thanks so much for your time and just taking us through markets action at midday. That was Andrew Padoa from Sasfin Wealth.